Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. Let's get the show started with the markets numbers. And major markets we track here in Africa were in the red at intraday. Both the JSE index in South Africa and the Nigerian stock index were down 0.13% and 0.03% each. Egypt is closed on Friday but ended Thursday's session low at 0.65%. Kenya was also down 0.15% on Friday. And the Middle Eastern markets are also closed on Friday. However, most of the markets ended their last trading session on Thursday negative, except Saudi Arabia, which gained 0.39%. And in Europe, stocks were higher on Friday morning as investors looked ahead to a key U.S. jobs report later in the session. Let's start the conversation with Ashutosh with this. Hello, Ashutosh. Good afternoon. Well, the all-anticipated U.S. jobs data is about now published. Any insight into what it looks like and what that would mean for investors?
Yeah, hi, Chimi. I'm sorry I'm unable to see the data up front here. But yes, it is, as you mentioned, it is a highly anticipated data, and we were expecting it to be, according to analysts who've been actually asked what number would be coming. So it's around 650,000. So perhaps I'm still waiting for that number. So it's going to be around that figure. But if it's around that figure, then let's assume it's 650,000 gains in the payroll numbers. So that's going to be a positive. That what that means, what that shows is that the shock that we saw last month was just a blip. It wasn't a trend that the job market was actually going through some sort of a stagnation there. So that is going to be a positive. But then what it will also mean was that the job market is doing good, which is again going to spread some sort of concerns in among the traders that what does it do now, or what does Fed do now with the job numbers actually looking good. However, having said that, the Fed has made it clear that the job numbers are still far off from what it would like it to be, what it would like them to be at. It's still millions of people who are out of job. The pre-pandemic level of employment was much higher. So still, that is the number that they would be interested in. So for now, they're staying put with they would rather stay put with their accommodative monetary policy.
Now, a fairer international tax system, that's the conversation around the globe. Now, the G7 finance ministers are meeting in London to hammer out a new global tax system that would ensure the likes of Google and Amazon pay their fair share of taxes. How optimistic are the EU leaders of a breakthrough?
Well, they are extremely hopeful, and they say that a deal is pretty much within reach. In fact, the finance ministers of these European Union countries, the four of the biggest ones, Germany, France, Spain and Italy, they wrote a letter to the Guardian newspaper saying that for more than 4 years, they've been working together to create an international tax system fit for the 21st century. Now it's the time to come to an agreement. So if you pay attention to the tax system fit for the 21st century, that is something what we've been talking about this week. We know that today's the tax rules are not in sync with today's reality. They don't really reflect how modern commerce works, and that is especially after the rise of these big tech companies. And these governments have actually been at the receiving end. They've seen a lot of their fair share of taxes being evaded by these big tech companies, and that's the reason why they've come up with their own unilateral measures to ensure that they pay their fair share of taxes. So now this is the discussions, the G7 discussions, is a way forward to actually a multilateral deal rather than these unilateral measures. However, US and Japan, they are not very optimistic that a deal could be as imminent as, say, a G7 meet. They don't see a major breakthrough taking place. They are pinning their hopes on that G20 meeting in Italy next month.
And more than 2 billion COVID vaccine shots have been administered globally. How is the EU faring now after having struggled to get its vaccination drive to take off initially?
Well, it's come a long way since those early hiccups. Now more than 250 million doses have been administered. Now, more than 80 million people have received both the jabs, and it is very much on course to vaccinate 70% of its adults in July. So it's all good about, as far as the vaccination drive is concerned. However, there are these small hiccups now where we are seeing a growing trend of people actually waiting for the Pfizer-BioNTech jab rather than go for a AstraZeneca jab, which may be available in their neighborhood clinics, but they are choosing to wait for this jab, the BioNTech Pfizer jab or Moderna jab. They say that they're doing this because they feel that AstraZeneca's jab is not as effective, which is not actually true. Then they say that perhaps there is this they're worried about the 3 months gap between 2 to 3 months gap between the two doses, and that could be a bummer as far as their holiday plans is concerned. So they would rather prefer a Johnson & Johnson's one shot and get on with it and get on with the holiday plan. So all these are the concerns that is holding back the vaccination drive, but for them it would have been much higher.
Well, conspiracy theory here and there. Anyway, it's been a great week with you, Ashutosh. Now I can say thank God it's Friday. Enjoy the rest of the weekend. Please be safe.
Thanks, Jimmy.
In the meantime, competition regulators in the UK and Europe have launched investigations into Facebook in a joint probe into whether the social media giant is breaking competition rules. Juliana will talk more about this and other issues in the UK. Hello, Juliana. Good afternoon. Well, UK CMA and the European Commission have launched antitrust probes into Facebook. Talk us through this and why the regulators have embarked on this.
Good afternoon, Jimmy. Yeah, this pretty interesting story. We know that big tech firms have faced a massive amount of scrutiny over the past couple of years. I would say particularly from Europe, who have not been happy with the way some of these big tech firms have been storing data and doing what they consider abuse. And this has come round for Facebook yet again. I don't think there has actually been an occasion where two big regions come together with an anti-probe of a Silicon Valley giant. This is the turn of Facebook. As you said, EU regulators as well as the Competition Markets Authority from the UK will be looking at, I believe, two offshots of Facebook, which is Facebook dating and the Facebook marketplace. They want to basically investigate whether it's unfair that Facebook are able to use all of the data they have on their social media users to influence them to purchase some goods. Facebook, believe it or not, they are still the social media giant. They have 3 billion people using their site every single month. They have over 7 million businesses advertising their information. So they just want to make sure that it's all hunky-dory above board. Facebook have released a statement saying that we're always developing new and better services to meet evolving demand from people who use Facebook Marketplace and dating, and they are going to cooperate fully with this investigation. I believe as soon as this was announced, Facebook shares were trading down 1%.
And on data front, investors are looking at the US jobs data, UK construction data, UK car sales. Now, which of these are investors focusing more today?
Well, it's all about the US jobs data. I actually had a quick, sneaky look on my phone, and it does show that it has come yet again below estimates. I think the estimates were about 650,000 new roles. It's actually much, much lower at 559,000. So that's definitely going to have knock-on ramifications. The FTSE all-share was already in the red, anticipating these numbers, and I'm sure it's going to dip even further. The all-share is down 0.25% at intraday. The FTSE 100 is down by 0.23%, and the FTSE 250 is down by 0.12%. In the currencies market, the British pound is up against the US dollar by 0.10%, up against the euro by 0.27%, and down against the Japanese yen by 0.05%. Worth mentioning the construction PMI data, Chimmy, which is out today. Again, just like with services, and manufacturing, it's gone up much higher, 64.2 in May from 61.6 in April. It does indeed show that the housing boom that we've been seeing over the past 12 months in the UK is dripping down into the construction sector.
And G7 meeting is also on tap. How would all of these developments this week shape the outlook for next week?
Yeah, massive event, G7 taking place on British shores, a big boost to Prime Minister Boris Johnson's post-Brexit diplomacy. This is the first time that we're actually seeing the world's wealthiest nations meet together and really meet, and not virtually. Of course, we've got that historic finance meeting happening. I know you've already spoken about that with Ashutosh, but that is significant. But then, of course, everybody's waiting for next week, Friday. So from Friday until Sunday, G7 ministers, G7 heads of state, alongside Australia, India, South Korea and the EU. They have been invited to Cornwall, very leafy, sunny a place within the UK, lots of fresh air, heavily armed. It will be lots of security there. They will be discussing lots of key issues, including, of course, China and Russia. It does actually start on the day where we will be getting April GDP figures, and because we've seen that the private sector is booming here in the UK, this is going to be another top notch for Prime Minister Boris Johnson and the Chancellor. They can definitely show off those details, especially because the OECD has said that Britain is going to be, the fastest G7 nation to recover from the pandemic. So it's going to be a very busy week next week, Chimmy, as it always is.
I see. Well, we have quite a lot to choose, so we keep an eye on that meeting and, of course, the data out next week. In the meantime, just be safe and enjoy the weekend.
Thank you.
And shares in Asia Pacific were mixed on Friday as the Reserve Bank of India held steady on interest rates. Hong Kong's Hang Seng Index closed 0.17% lower. In mainland China, the Shanghai Composite rose 0.21%, while the Shenzhen Component gained 0.74%. In Japan, the Nikkei 225 fell 0.4%, while the Topix Index finished the trading day fractionally higher. South Korea's Kospi closed 0.23% lower. Meanwhile, stocks in Australia advanced, with the S&P ASX 200 0.49% higher. And UK stock futures were little changed on Friday morning ahead of the key May jobs data. S&P 500 futures were unchanged. Dow Jones Industrial Average futures dipped 38 points. Nasdaq 100 futures were flat. The May jobs data is a key factor in determining the path of Fed policy in coming months. The latest unemployment data on Thursday was also better than expected. And study by a credit rating and financial regulation expert at Britain's Austin University in collaboration with South Africa-based credit rating analytics is proposing that poor countries struggling to meet their dues in the wake of the COVID-19 crisis be given a temporary buffer to avoid the risk of credit rating downgrades while they renegotiate their debts. Costs from the pandemic have triggered a spiraling in the public debt burdens of many developing countries, prompting the G20 group of major economies to last year unveil a proposal designed to help governments to overhaul the debt they owe to official and commercial creditors. The solution proposes a three-stage initiative for poor countries seeking debt relief. The first involves a waiver granted by private creditors, a move that allows credit rating agencies to change their sovereign rating model temporarily under a scoring system that acts as a buffer between a default and the country's current rating. The initiative's third stage proposes engaging an advisory service to assist the affected countries' rating agencies and private investors in the process. And South African President Cyril Ramaphosa this week announced that his country will return to stricter lockdown measures in the face of a sharp rise in COVID-19 cases. In the new measure, the nighttime curfew would be extended by an hour to start by 11 p.m. until 4 a.m. A maximum of 100 people would be allowed at indoor social gatherings and no more than 250 at an outdoor gatherings. The number of people attending funerals will be limited to 100 people, and after funeral gatherings were banned completely. Non-essential businesses must close by 10 p.m. Well, let's look at how these has played out and, of course, other developments in South Africa this week. Our South African correspondent, Brian Fubeni, joins us now. Hello, Brian. Good to see you. Good afternoon.
Good afternoon. Thank you for having me.
So COVID restrictions were imposed by the president on Sunday to stop the spread of the virus. How has that played out so far this week?
Well, like you rightly said, the new regulations, we moved back to level 2, with the curfew moving from 12 midnight to 11 to 4 a.m. So at the moment, this past week, nothing much has changed since the regulations are not that strict as people thought they would be. There was already outcry from one of the major industries, which is the alcohol industry. They thought that the president would shut the tapes, as what they call it in South Africa, but that did not happen. So that's still good for businesses. So at the moment, the slight regulation and restrictions haven't really impacted a lot on businesses and how trade has been going this past week. But we'll see as the coming weeks if that will affect trade.
Okay. Now, two major data out from South Africa this week, the PMI and the job data. Whilst the PMI showed stronger economic growth, the rate of unemployment accelerated. How did analysts bunch these two data?
Well, like you rightly say, the PMI did increase. It's been increasing for the past 8 months. It increased again in May to like 52.7%. This is good because that shows that the economy is recovering, but analysts are saying that it's recovering at a very slow pace. And this has really affected even the manufacturing industry, like you rightly say, that is contradicting what Stats SA released with the unemployment figures on Tuesday, showing that very few people are getting back to work and things are getting back to normal. So it's a good thing that the PMI is really increasing, but not a lot of people are getting back to work. But hopefully, as time goes on, as the PMI increases and the unemployment rate as well will also decrease, and then that will finally go in sync, and then we'll have a really good economic recovery as the pandemic continues to slow down.
Now, looking at that unemployment data, the report suggests that South Africans available to work but not actively job searching rose from 42.6% to about 43.2%. Why do you think people are not actively searching for jobs?
Well, the major impact we all know has been the COVID-19 pandemic. Which has really affected a lot of businesses, not just the small to medium scale, but even large companies as well. We've been seeing a lot of retrenchments, a lot of companies shutting shop, especially the small to medium scale businesses, which employ a lot of young people. So the most affected people at the moment is the young people. And young people are discouraged at the moment with how even government itself is not coming up with solutions for young people to create employment, which was one of the key things which government had said they would do. But at the moment, we haven't seen any tangible results. So young people are really discouraged. They are saying even if they go and actively look for jobs, there are really no jobs because of the COVID-19 pandemic. And already the economy was already under a lot of strain even before the pandemic. So young people are really saying, what is the point of going to look for jobs when government is not really creating any jobs for us? So at the moment, that's why people, especially the youth, are very discouraged to even actively look for the jobs.
All right, in another development again, Eskom announced this week it's extending its load shedding till today, Friday, 10 p.m. Now, the government is also seeking for private producers to help boost electricity. What are the conversations around these, right now, and how are businesses coping with the load shedding?
Well, with Eskom, unfortunately, we received more bad news today in the morning. Load shedding is not going to end today on Friday. It's going to end, it's been pushed to Sunday, Sunday night. So we might have a dark weekend. But yes, government is trying. We do know that there have been bidders who are yet to supply the government with power and electricity. There have been 8 bidders, but recently, this past week, we did hear that there are 3 more bidders who've put in their proposals to supply the country with electricity. But at the moment, it's still a long-term process. Nothing has really been penned down because they're even saying they don't even know how much electricity is going to be supplied by these independent power producers. But obviously, at the moment, not having power is bad on the economy, because that just stops production. So businesses are really struggling at the moment if your company is not having power for 4 hours, that's productivity stopped. So businesses have tried to have generators, but you cannot run your business or a large manufacturing company on generators. So it's really hindering progress, which is taking economic recovery backwards again.
Well, Brian, don't let the no light over the weekend spoil your weekend. Enjoy it to the fullest.
Thank you so much. Same to you.
Right, in the meantime, Amazon faces protests in Cape Town, where indigenous people say its choice of land for a new headquarters would desecrate a key heritage site. Amazon Africa headquarters, an ancient dispute over land, has been stripped up anew by Amazon's choice of sport for its new headquarters in South Africa. Protesters oppose its plan to build a 70,000 square meter complex on a site in Cape Town. The location is of huge significance to indigenous communities. 500 years ago, the Khoi and San people drove back Portuguese raiders on the spot. A century and a half later, it was where Dutch settlers launched a campaign of land dispossession. Now protesters want the history marked and not with an Amazon office. And Tanzania plans to begin the construction of a delayed $30 billion liquefied natural gas project in 2023, following the resumption of talks with companies including Equinor ASA. Construction is expected to take about 5 years. The project gained momentum after President Samia Suluhu Hassan took office in March and directed her administration to fast-track delayed investments. And with that, we draw the curtain on today's edition of the program. And of course, for the week, thank you for watching. I'm Chimeze Obi Iwago.